Hey everyone, wanted to do a quick article review here I pulled from Keeping Current Matters. Just some interesting nuggets about the real estate market right now, where we came from, where we're going, etc. So you can see here it's saying that the unicorns have galloped off. And what they're talking about there, unicorns, obviously something is greatly desired, but difficult or impossible to find. And so what they're talking about is the fact that we were in a marketplace that was very difficult to secure good deals on. This is back, pre-rate increase. So midway through 2022, all the way back through the pandemic era, rates were super low, and then prices, of course, were going up rapidly at that point. So people had the money and pre-approvals with excellent rates to go find a home, but finding that good home was like finding a unicorn because everybody else was hunting for the same thing. Buyer demand was very strong, inventory was very low. So what Keeping Current Matters here is saying is that the unicorns are gone now, which is actually beneficial to the buyers in the marketplace. It means that yes, prices are higher, rates are higher, but prices are lower, and there's much more advantage for you if you're starting to house hunt right now. It's going to be a lot easier to find a home. You're going to get a better deal on it than you would have a year ago, price-wise. And you won't have to bid against 17 other people to get that home, and really have to stretch your budget to find a home that you like. Um, so that's kind of interesting here, but it says comparing real estate metrics from one year to another can be challenging in a normal housing market. That's due to the possible variability in the market, making the comparisons less meaningful or accurate. So obviously they're basically given a caveat here. But comparing this year's numbers to the two unicorn years we just experienced is almost worthless, they say, which I agree. The market has changed drastically over the past year, roughly, since those rates started to climb. Um, so let's see here. So the pandemic profoundly changed real estate over the last few years. The demand for a home of our own has skyrocketed, and people needed to find home offices and hopefully big backyards. So you had waves of first time and second time borrowers jumping into the market back during the pandemic era, really from like 2020 through midway through 2022. Mortgage rates were driven to historic lows, absolutely insane. I mean, we got down below three on average for a couple months there during the pandemic timeframe. The forbearance plan basically eliminated foreclosures, so people were able to stay in their home even if. So basically, there wasn't a huge hit, even though people were out of work. There wasn't a huge skyrocketing in foreclosures because of the forbearance. So it's not like we had a bunch of inventory coming in from that. So basically, people didn't have to sell. A lot of people didn't have to pay their bill for some time. So yeah, definitely got rid of the foreclosure market. All of that while homes are selling super fast and we desperately need inventory. It definitely wasn't coming from that sector of the market, which all in all, I think is a good thing. Nobody wants to see anybody lose their home. Um, and then home values reach appreciation levels never seen before. Absolutely. I'll show you real quick on the graph that I've shown a million times, but it's still very important to note. So you can see here, average appreciation over the 10 years. Boom. This is the COVID spike. I'm trying not to get taken down here. And you can see, boom, prices shot up. This was a historic jump in prices, something we've never seen in the Austin real estate market, or really even nationally, because the national prices didn't go up as much as here in Austin, but they did shoot up as well. So this was astronomical levels of appreciation, something nobody could have predicted or expected. And then you can see that they bottomed out back in December of 2022, and we're on the uptick again, but at a much more moderate level, not a straight vertical graph like you see there. So yeah, just wanted to share that with you real quick. So yeah, they reached appreciation levels never seen before. And so that's what they mean by everybody wanted a house, but good luck finding a good one. So buyer demand. So if you look at the headlines, I'm just going to read it here. You'd think that there aren't any buyers out there. We still sell over 10,000 properties a day in the United States. It's insane. Every single day, 10,000 properties change hands. Of course, buyer demand is down from those two unicorn years, but according to Showing Time, which is an application that a lot of us real estate agents use to track property showing, so we can see who's coming in and out of the house, and we can coordinate the time. But that's minutia that if you're just looking to buy a home doesn't really affect you much. But they do have a lot of data on who's touring homes, we compare it to normal years, 2017 and through 2019, we can see the buyer activity is still strong. And here's the graph for that. So you can see here, 2017, not exactly sure what they're measuring here, 1.57 what or 157 what. I'm not sure if that's like millions of showings a year or what that is. But you can see here that we are actually higher than we were back before those unicorn years that they're referencing. So yes, demand was insane. There are probably more showings because you had to look at more houses just to find one that you could actually get under contract because there's so much competition. So demand was crazy, lots of showings, and of course, buyer demand has slowed down since then. And that's because the rates went up. Less people could afford, less people wanted to buy, more people sitting on the sidelines. But you can see here that we actually still have historically pretty good level of showings. There's still a lot of people out there looking for property, even more so than what we had over the past 5-6 years, with the exception of these 2 years here. So that's pretty cool. And then it goes on to explain home prices. We can't compare the prices over the last couple of years, of course, because that graph was insane appreciation. But here's what we can see. This goes to show you, the graph that I showed you a minute ago, showing the Austin trend line, sums it up right here. We had 2 years. In 2 years, properties went up 29%. That's just insane amount of growth in property values. I've said it once, I'll say it again. It was an unhealthy amount of growth. It was definitely great for all of us property owners out there, but it's not sustainable to have properties going up that fast. And then you can see they definitely moderated in 2002 or 2022. Now the expectation is that we'll probably have about 1 to 3% in appreciation here in the Austin market in 2023. And then we're probably going to start hitting that 5% going into 2024 and beyond. So definitely something to continue to watch. And if you're thinking about buying, now's definitely the time because prices are trending back upwards, and that's probably going to continue to be the way things go going forward. Prices bottomed. Now's the time to jump in, is when everything's on sale, right? Foreclosures. So this one's pretty cool too, because a lot of people have been thinking, oh, there's a recession potentially coming. We're in a recession. I think we've been in a recession for, half a year now at least. But all that to say, people are kind of waiting for foreclosures. I've had a lot of clients that are like, oh, well, let's wait and see if prices fall more, even though, if you're following this data, you can see that's not likely going to be the case. But all that to say, foreclosures. So you can see here that even in the normal market leading up to the crazy market we were in, foreclosures were higher. So they're not happening, not nearly to the same degree. In fact, if you look back, I don't have the trend line here, but if you look back in 2008, 2009, we have roughly 6 million foreclosures every single year, or for those couple of years, 2007, 2008. 6 million on average. You can see here that our average for 2022 was 300,000, which again sucks. Of course, nobody ever wants to see anybody foreclosed on, but that's literally like what, a 20th, 5% of what they were in the last real estate crash. So if you're sitting on the sidelines hoping that prices are going to come down and foreclosures are going to come back on the market, I'm talking to you investors, you might be sitting there for a very long time. It's not a likely scenario to play out. In addition to that, I just did another video recently about the rates, not the foreclosure rates, but the equity that people have in their property. 74% of homeowners right now have over $100,000 in their property. So why would they let their home go to foreclosure? It just doesn't make sense. It's much easier to just sell it, take $100,000 off the table, go rent for a couple of years, rebuild your credit, rebuild your income, and go buy something else. It wouldn't make sense to let the bank take it from you and take all that equity. So yeah, it's just not going to happen, guys. If you're waiting for a big wave of foreclosures, not likely. And if you're waiting for something close to, the last real estate recession, the 2007, 2008 recession, you literally need these foreclosure numbers to jump by like 95%. So just not likely at all. So yeah, this is, again, good article. As always, feel free to reach out if you have any questions at all about the real estate market, the process to purchase. or even if you just want to run some of these numbers and kind of determine what makes sense for you, if now is a good time to buy or sell. So I'll be on standby. You can call me, you can text me, you can email me. You guys know the routine. I am always available, and I'm looking forward to hearing from you. Talk to you soon.